All right. Hello, everyone. My name is Matthew Timpane. I am from Schaefer's Investment Research. I've been a senior market strategist over at Schaefer's now for 6 years. Previously was a portfolio manager and partner for a registered investment advisory firm that we did a lot of multi-asset type of portfolios, high yield, value, momentum styles, and we were active traders. We weren't passive portfolio managers. So today we're just going to quickly go over a quick market outlook and please. So had that designation since I think 2018 as well. Maybe that was 2017. But feel free, and we will go over everything. Does say that we do have a little bit of unstable internet connection. Hopefully that does not cause some problems here. My market outlook really for 2025 is we are still structurally in a bull kind of market here. It has obviously kind of changed a little bit, and I don't know how that chart got up there, but let's look at the SPX. As you can see, we are still stuck underneath the 50-day, so some things have changed in the last few days, right? But I was structurally bullish heading into 2025, and there's a few reasons for that. One, we have the new administration coming in, and while I don't look at things from a political standpoint, we do know that usually when new administrations come in, whether it's Democrat or Republicans, that we typically kind of get this carryover effect for at least one quarter, but that's kind of been extending out to about 2 quarters now. And that's kind of my theory on this, especially with the new administration having both the House and the Senate. We think that there's going to be a lot of catalysts that will keep this market kind of bullish, essentially calling it maybe a Trump put, much like we had a Fed put, which we kind of still have a Fed put maybe now. It's not as prominent after the last Fed meeting, I would say. We were expecting 4 rate cuts in 2025, and now we're only expecting 2 after Jerome Powell spoke and at the rate decision in December. So I wouldn't say the Fed put is there as much. Obviously, some things can change. So, I mean, it's definitely still there. But I would look at it more as a new White House administration, the Trump put, going into 2025. And then I think somewhere around, heading into the summer, into that second half of the year, is where we can start having some issues kind of going forward with kind of volatility and expectations that we kind of get a larger pullback, right? The real reason why I think the first half ends up being pretty bullish is because we have things like global liquidity starting to kind of try to turn here, and then which is the central banks. And then also the ISM is turning. I think we got a report this morning. It was 49.3%. That is starting to turn higher. If that breaks above 50 level on ISM index, I think that it kind of leads to a more bullish situation. But there's a few reasons why we think 2025 second half could be a little bit more volatile. You can get a pullback, even though, we'll probably end up the year positive. Spreads with ISM definitely diverging pretty big. If spreads catch up in a big way, like the 30 10-year spread or the 10-2s, you kind of look at it like that. Those typically have a tendency to kick off volatility and large pullbacks. So that's one reason, and that expectation would be somewhere in the second half. And then the other expectation is when you look at back-to-back S&P 500 20% years, we often see that the second half of that third year is typically a lot less bullish. So we kind of get that volatility as we head into, the later summer months. And then obviously we kind of get back to that whole September kind of swoon end of, OPEX there into October. So let's look at some tickers. If anybody has any out there, I would love to see if you guys put some in there. If not, we're just going to look at some charts. We're looking at some things today to trade ourselves. PJT. All right, PJT. You know what? We're going to end the video on my side so you don't have to see my face while we just go over the charts. PJT Partners, not one I'm exactly super familiar with, don't need to be. So from a fundamental standpoint, I'm not quite sure, but as of right now, it's holding 150. 150 seems to be like a pretty good spot here on the stock. We can check something else here too. I don't know what the open interest would be in PJT, a name like PJT, but we can take a look to see if there is any options activity that's going on here. It is also holding the 50-day. It is kind of putting in like a little bit of an inverted hammer there into that 50-day. So I would be a little reluctant to that. There is real no option activity there, and that is what we focus on. That is our specialty. For me, it's pure technical trade. If it holds 150, if you want to be in this, 150, 151 area here, that would be the level if you're going to trade it. And if you're looking for a breakout move, obviously you're going to be looking above 169.5 here. So you're kind of in no man's land, but you're able to build a position if you want. A lot of the times we'll see these prices slip right below that moving average and then retry to gain it. You do have a downward sloping 10-day and 20-day there. And then trend is, negative at this time. That is my kind of trend indicator there at the top. So that's kind of where I'd be with PJT. All right, we got more coming in. Thank you, everyone. Burl. All right, Burlington Northern. I have traded options on Burlington Northern. This actually I kind of like here now. Thank you actually for pointing it out. I appreciate this. This is something that will stay on my radar. We are holding that 282 level. I do know this does trade options, so let's just kind of look at front month here for any kind of trades. Looks like 260 is the peak put, 270. So you really don't have further support down to about this 260 area here. But definitely could be a move above the round 300 is what I would look, right? So if you want, you can build a position. If it continues to hold this 280 and the 50-day kind of level here, you might get, some little moves below it. But as long as it kind of holds that, I would probably set your stop around that 50-day. These prior highs, you can obviously get a little bit move lower, but as long as it doesn't really kind of fill that gap, I think you're pretty well off here. The real move will be over 300. If you want to be conservative, save your capital, do trades elsewhere, I would just look for a break above 300. It's a nice round number. If you get moves above those round numbers like 300, 100, 200, we often see follow through. So you often see at least 10 points kind of follow through. In a name like Burlington, you could go to 320, even 330 on a breakout above that with ease. All right, Google. All right, I know Anka just did Google, but I'll do it as well. It is a name that I do like. It is a name that we have been trading, and you'll see here. I actually kind of just did a put trade. I forgot the other day. It was not that long ago. We got it off for about 300%. Our entry here was on it was Monday the 16th with 5-day option expiration, and we got a 300% move into that Friday, December 20th. So there's some things that I do a little bit differently sometimes, but from a swing trading perspective here, you are back above this prior high here that was set in July. That is where you want to be. It's the danger zone below that prior high, in my opinion, and that's how you can kind of get a move, kind of a swoosh lower here back to those prior highs that were back in November and October. You also have this large gap down here. So anything down below this level, I would call the danger zone. If it really pushes below that 20-day moving average, I would have a big expectation that you are going to see 180 and 180 pretty fast. As you can actually see, some of my notes from a prior trade right there that we do for our subscribers. For me, the all go signal is above this kind of 196, 195. You're going to at least shoot to 200. Again, nice round number up here around 200. If you start seeing wicks like this on a candle, that's usually means you're going to get a rejection fast move. That's why I was playing that. It was around 200. Try to rejection here just to try to get a quick trade off. I am bullish longer term on Google still very structurally bullish here. So for me, again, you can try a more aggressive bull above this 196 level. Look for that to kind of be taken out. But if you want to have a position, perfectly fine getting into it right here. Just use that 20-day, in my opinion, as your stop loss on this, just to be extra safe, because otherwise you will go down to that 180 level. PG, Procter & Gamble, Cincinnati favorite, which is where we are out of, actually. I was looking at this not that long ago, not on this template. I try to use a template that's fairly clean for all of you. So as you can see, trend is still very much intact. We are pulling down to a spot here. Now we got this big whoosh lower, but this whole area right kind of here, we've seen buyers step in. So as long as we're kind of holding this zone area, this is where the buyers have stepped in. It does look bearish, obviously, with the moving averages rolling over. But 165 is where buyers have kind of stepped in and below. Those are levels you don't really want to short. They look sometimes good. And let's just take a look at the open interest here quickly. While that populates. Yeah, so our peak put is 165. So you really need a breakdown below 165, a nice close below it. Not just a move below. As you can see here, the move below 165 was bought up rather quickly. So market makers are probably going to defend that level, and then really the next level would be 160. So you could start seeing them step in down here around these prior lows here around 160. Trend would have been broken, but again, not all that uncommon to break trend and remove higher. So for me, I would not be short Procter and Gamble here. Longs are tough, but it is, it's something that you could trade against if you're looking against like 165 itself, or 160 if you want to have to give it a little bit more room. Nvidia. And then I'm going to have to pop up a quick promotion here. This is a name I've actually been looking at real recently. We had a DeMark Niner here right off the 80-day that's coming up right off that 130 support level. For people that are aggressive, you got in. It was a nice little trade. Now you're back above the 50-day and the 140 level, which was that prior high back in May. So this is a level that I think has some significance. We are trading up into the October high. I don't know how much weight I would put on it. It did have two rejections there. But we do have the CES tech conference on Monday, which is a potential catalyst that could break Nvidia out heading into January options expiration. So as long as it holds 140, that is the peak call level for January expiration. That is your call wall. If you're above 140, market makers are going to have to buy this stock if it keeps going up in price. So that is a good situation to be in. The next spot that you would get to is about 150 is the next big level I would look at. There's always potential at 145. It's decent size, open interest there. But I would look at 150 as your target here as long as it stays above 140. All right, just real quick promo. They're going to put it in the chat as well for us. We do top picks annually, and these are free. You just got to put your email in. It's free for your top picks annually. We also do a mid-year review top picks. This is one of my picks this year. It's also on the Money Show top picks that I do. 2023, I took first place on the Money Show's top picks with MongoDB, MDB ticker, and then also eighth place because I did two picks, Amazon. This past year, I did TSM, so Taiwan Semiconductor, which took third place. I just found out. So that was up about 90 to almost 100% to close the year out. I think it was about 90 because we had that little bit of a whoosh there at the end of the year. But then we also do mid-year picks. So if you're on the email, you'll be able to get to the mid-year picks. These are some great picks. My 2024 mid-year picks for July 23rd is our anniversary, roughly. Correct me if I'm wrong there, Katie, but I think it's right around there for our anniversary date at Schaefer's. And my top picks for that were Palantir and Tesla. Palantir's at least 200% on a stock basis, and Tesla almost went 100% from the levels. So we do a lot of great picks. And then I think even my 2023 pick for the mid-year was MSTR, so MicroStrategy. I just think if you held that from that idea, that's up huge, hundreds and hundreds of percent. So it was, I believe, about 100% by the end of that year, and it kept going. Obviously, that's pre-split. It was around 300. One of my biggest ideas this year is C Limited. I think we're breaking out this big weekly base here, those August 2023 and August 2022 supply levels. I think it's buyable down to about $90. That would be like my ultimate kind of stop loss. if you do get it, you'll see that I always kind of put a little bit of, ideas in here. This is where I think the big support zone is. I want people to be able to trade against, because if I am wrong, obviously things can go bad. You want to have that area defined for the subscribers. So please check us out. The email will be in the chat for everyone. Let's get back to the charts though, because I know I did see you guys have some in here. All right. ACHR. All right. Archer. Archer Aviation. This was something actually I just talked about. We do also, it's called the playbook, as you can see up here by the name on my template. It's a Monday morning video, and Joe, one of our other analysts, one of our other strategists on the desk, he actually does it. I used to do it, but I still fill in from time to time. And we just went over Archer this Monday morning, and the name, it's been intriguing, right? These space names, Lunar is another one, LUNR. Joby is a drone name that's kind of getting caught up in this as well. And I believe there is another drone name out there as well. I just can't think of it at the moment. But I said, hey, if we're going to be coming down here to this 985 level, this prior peak here back in November, this is the opportunity to try to get long against that 10-day moving average. And it worked out really well, right? You had one close below, and now we're back. So you take a little bit of risk there right at that day, maybe take it down, say, hey, I'm going to put my stop down at this 20-day. You got to expect it's going to move a little bit more. So you're on these smaller cap names, you're going to want to set your stops bigger. They can move 10, 20, 30% in a day at times. So you aren't going to want to set a 3 to 7% stop loss. You're going to at least want a 10% stop loss on these names and size the portfolio accordingly. But as of right now, it held this $10 level. We're back above the momentum line. Looks really well. The 10 days turning back up with a fast approaching 20-day moving average. I like this name. Let's just kind of look over here at the options activity. It has been very active on the options flow the past few weeks. So let's just see what we got. So you are above the 10 strike, and we are starting to see a little bit of a put build there at that 10 strike level with just above 10,000. So probably looks like 12,000 contracts. That could be very bullish. I'm not seeing a lot of upside like call walls here that could take the position out. Let me just kind of scan a little bit deeper into the configuration. We're above 12. Peak call was 8. Second large open interest strike for the call level was 10. So we're above that. So as long as you're above 10, the next level is $12 on this stock, which isn't far off. 80 cents now today. And then you get through 12 when looking at the OI config, you're probably going to see $15 pretty quickly. But this would be the line in the sand. If you got in today here, kudos to you on this re-break above the level, or even if you took a little bit of a buying opportunity into that previous high. Always good risk reward levels to kind of trade against our previous highs in previous months, previous years. Always you can pull out, look at previous, obviously multi-week and multi-month highs and lows. But when you're trading something very volatile, that previous month is a key level that you're going to want to hold against. JNJ, all right. Actually looked at this not that long ago. Just because it's very contrarian, and it's something that we kind of do over at Schaefer's is we do like to look at contrarian trades. I'm just trying to get it back up to 2024. So again, this is a spot where buyers showed up. Looks bad on a chart basis, right? I mean, that looks horrible. It has been in a huge move lower. A lot of that's probably due to Robert Kennedy being in the administration. Obviously, J&J has vaccines and was part of the COVID vaccine. But from an interesting perspective here, J&J is at a spot where we've seen previous buyers show up. So if it holds this level, it would be bullish despite those moving averages lower. You could look for trades up into this 200-day and 50-day kind of moving average area, especially up to about 155. Now that's not huge, but J&J is a slow mover. If we do break below 144, that would be your short opportunity from the technical side. Looking at the open interest configuration, I do think 145 we're right there, right? That's going to be a tough level to kind of break. That is the first large p put position past OI balance, which OI balance has the peak put, and that's at 150. So if I had to make a bet right here, um, it would actually be to hold on to this level that we're at and at least move up to 150 by January expiration. So that's January 17th or 21st. Um, so it's January 17th this year. So at least to 150, which, hey, I mean, that's perfect level there, right? You had a big breakdown, big gap. So 2 weeks, you can probably expect to move up to about 150 in that time frame. That's kind of how I see it as the OI config looks right now. Let's just take a look. We do have a few minutes left. Any other charts, any other picks, people? Please send them out. Um, Here's a name. I'm still in half a position. We'll just pop it up here. So cart position I put back on. I think I did put it on a little early. Little anticipation, not how we always like to do it. We really kind of want to see a break here. But this was back in September, I believe, that we put this position on. Yep, September 12th or 11th. So right around here is where we put the position on. So it had a great move. We took half of this position off, but it's something I've kind of been looking at again, right? We're now sitting here, and while it's a little kind of wishy-washy, we are kind of holding those September high levels. It's a little more sloppy of a stock here, but we'll see if this can hold. All right. So as you can see here, we're also holding the round 40 level in the 40-day, and now we're breaking above this 50-day level. So if we kind of get some momentum back into this market, this is a name that could see $50 really quickly. That's 10%. I mean, it wouldn't really take much to get there within just the next 2 weeks, even week. I mean, this thing can move when it wants to move. So CART is a name that I'd be watching here. You do have 45 to kind of take out if you want to get back into those gaps, because that was a bearish island reversal right there. But that's one name. ELF, please. All right, perfect. Thank you. ELF. ELF had some really good consumer data, actually. If you look into alternative data's ever, I can't remember what it was. It's one of their products that was new. Obviously, I'm not a makeup guru, but there was a real big uptick on it, and there was an influencer that was extremely popular that it really was promoting this product as well. So it's got these big, large wicks, right? Looks very bearish, but trend is still higher. We're still seeing higher lows. Doesn't look pretty or anything like that, but you are still seeing higher lows. We are at this 50-day moving average. For me, I love horizontals. Horizontal support much more than any kind of trend line or anything like that. So if I'm trading ELF here, 118 is my kill position below that. But I do think ELF looks good because it had this base breakout. It does have some positive movement. Now, there is some work to be done on ELF. It's not going to be a simple, easy trade. This isn't a momentum-based trade right now, but it is a position that you can get into and then hope for a move back to these prior highs or even this 200-day moving average. Now, I think a lot of this was actually also caused by a hit report, by a short. And I think ELF has refuted that and came out with the data saying, that what they're doing is claiming is basically just false. We're not reporting things in any kind of fraudulent way. So certainly a name that is been a momentum name. So once it gains traction, you do kind of have this flag coming wedge pattern. So once you kind of get a movement higher, I would maybe look if you really want to get into it, look for a move above like the 10-day at least. But you do have rolling 20 days, and you still have some other areas of resistance. You can see this 80-day worked pretty well as resistance at one point as well. So just be a little bit careful. Use that 118 as your stop level. A break below that, back into that base, you're going to go back into a chop range. No reason to be in it. Any other picks? We have about 1 minute remaining, it looks like, and I don't want to run over for everyone. But thank you for joining me. Like I said, still pretty bullish here heading into 2025. I think until we get to the second half where we can see some more volatility. Come over to Schaefer's, get that free report. We've had a lot of great picks in there. I know my mid-year was Tesla, but I know we've done Tesla on an annual too, and that was a huge win that year. So a lot of free stuff over at our website, free options news, which is a little bit different and unique. It's not just about flow, we're also quantifying it, and you'll see a lot of interesting things. So come on over, and if you'd love, we'd love to trade alongside you as well.